All right, here we are. I've been dying to talk about this for quite some time. This was based upon an article that I saw based upon the rapper Fat Joe, where he actually had his accountant stealing from him. And he eventually found out, and I believe he's currently suing his accountants for taking his money. And I know this is not the first time that Fat Joe's had issues with the accountants. I believe he went to jail for tax evasion a couple of years ago. It was because of accountants. I hate to see things like that because it really gives the profession a bad name. It makes folks weary of using the services and really tough to trust accountants. Folks who are in similar situations like Fat Joe is and having business managers and they have check writing privileges against the accounts. I wanted to talk about things that you can do or things that you should be aware of, whether you are an athlete or an entertainer and you're in the position where you need a business manager. I wanted to go through a couple of things that you can do to prevent such things from happening to you. So I had a chance to go through the lawsuit that Fat Joe had filed against his accountants, and I saw some of the issues that he ran into and the instances where funds were misappropriated or where he thought they were misappropriated. I wanted to give you an idea of things that you can do, things that you can set up, controls in place to make sure that this doesn't happen to you. The first thing which caught my eye and where the red flags went off was that in his lawsuit, he had mentioned that once he thought something was going on that was wrong, he reached out to the accountants and said, hey, send me the QuickBooks file, which is essentially a set of the books. So I would imagine at that point, he could review it or have someone else review it and dig in to see what was going on and try to pinpoint where that was happening. And apparently he got curved. They took some time to get it to him. And that, to me, was red flag number one. When you have a business manager and that business manager has check writing privileges, they should never, ever, and I'm emphasizing ever, have full control of your books. Your books are the equivalent of your financial masters. They're like the equivalent of having masters if you're a musical artist and someone else is controlling your masters. That's never a good thing. You want to make sure that you have full control of that. And it's something that doesn't seem like a big deal on the surface, but when situations like this happen, you want control of those books. With these programs, in this case it was QuickBooks, there are a couple of solutions out there. QuickBooks is a popular one, but there's a couple of others out there that manage and maintain the books. What you want to do is, as a client, you want to go and get that software and pay for that software. I really recommend the online versions of it. So go get the account, sign up for this on your own. QuickBooks, Xero, whatever the bookkeeping software is, you can ask whoever it is you're working with what they're using, and you go get the account. Don't let the business manager, especially if they're writing checks, don't let them go get the account for you and say, we'll take care of it for you. You go get it. Because what you can do is give your accountant or business manager access. When they can get the same access and they can go in and do whatever it is that they need unhindered. But you need to control that account. It sounds like Fat Joe did not, or his accounts were not using the online version because they were asking for files to be sent. However, if he had had the online version and if it was his account, he simply just would have been able to cut off access. Actually, he would have been able to log in, see his account, cut off access to these other accountants. And if he wanted to bring someone else in to look at it, he can easily do that by simply providing a login. When these folks have check writing privileges and they have access to the books, there's no controls in place. So they can write checks out to whoever they want to and then go in your books and pretty much make up something for what it was for to make it seem like a legitimate business expense. So you need to have controls in place to avoid that. And another thing is with these programs, why it's good to have the online version and logins, because if something like this were to happen and you need someone else to review it, most of these programs have what's called audit logs. So you or someone else that's checking can actually go back and look at the history of all the entries that have been made. So let's say that someone was in there and they were doing some funny business when you caught it, and they go back and try to fix it. Anyone that kind of knows the way around the program can go in and look at the history and see what happened. And you can have it tied to particular users. So if someone went in there and started doing funny business, anyone would be able to go and track it. Versus how he was set up now, he cannot do that. Or who knows how that file was doctored before Fat Joe got his hands on it. That's a number one of importance. The second thing is, from looking at the lawsuit, was a lot of the misappropriations, it wasn't performed by the CPA themselves. It was the admin, client specialist, which is normally an admin, that seemed to be doing, or at least in the claim, was misappropriating or taking the funds. So the thing is this, is that when you're dealing with your business manager, your accountant, your CPA, they have assistants. And in the sense of bill paying, for the CPA, it's not a high value task. You're paying bills. So chances are, yes, you have that relationship with the CPA, and that's who you're talking to when you go and you meet with them. But as far as who's actually performing the duties, chances are it's somebody else. It's an admin who more than likely is not a CPA. So I say that to say this, is that with CPAs, we're bound by a certain set of ethics laws, obviously from what we go through to get our licenses, similar to what an attorney might do, in the sense that there's a rule of ethics that they have to follow to maintain licensing. Now, when you have an admin, they may not necessarily be beholden to those same set of ethics. The question is, when you engage with a business manager or a CPA, you want to find out who else is on board that's helping them, and more specifically, who else is actually going to have access to my accounts and books. So that's what you want to find out, if they're folks other than professionals. Now, it's not a foolproof way to say, okay, they're a CPA, they must be 100% ethical. Obviously, there's bad apples in every bunch, and vice versa. Just because they don't have a CPA, that doesn't mean that they're not ethical. I guess the question is, you just really want to make sure that whoever it is that you're hiring, the people that they're hiring, to make sure that they have checks and balances with that person. If you really want to go forward with it, ask your business manager, hey, are the people that are going to be actually in my account, have you done background checks on them? Have you done credit checks on them? Because at the end of the day, it's really going to be the admin that's going to be a lot more intimate with your bank accounts than the actual CPA. The CPA is going to be focusing on more high-level tasks, such as your taxes, your tax returns, estimated taxes. That's the stuff that the actual CPA will be focusing on. The day-to-day paying bills, that's more than likely going to be managed by an admin. But what probably happened in Fat Joe's case, and I'm speculating, so I don't know, but what probably happened was the admin was taking the money, and the CPA may or may not have been aware of it. It sounds as though the lawsuit indicates that he might have been. And what the CPA probably got tied up in is trying to do damage control and cover it up. Because if this got out, I'm sure he was aware that his practice as he knew it would be finished. As they say, bad news travels fast. And I think what he was trying to save face. But again, that's me speculating. I don't know. Again, what you want to do is just make sure that the people that you're hiring that they know who they're hiring. Another thing is, if you are willing to give someone check writing privileges, then you shouldn't have a problem with utilizing auto pay. Now, again, referring back to the lawsuit, Joe first got privy to it was he was missing mortgage payments, or they were late. And with something like that, your mortgage is usually the same amount each month. And most of these vendors also have auto pay, or your bank can set up auto pay. So if you're paying the same amount and it's something that you know is going to be a recurring bill, set it up with the vendor to take the draw automatically, or set it up with your bank to make the payments automatically. No need to involve humans, or even give that opportunity for humans to put them in the position where, you know, that money can be taken or misappropriated. So utilize auto pay. Most vendors, especially with mortgage lenders, or mortgage services, they have functions or mechanisms where you can auto pay the loan. If they don't, then set it up with your bank where the payment is made automatically. So there's no need or no threat for someone to even touch that money. So utilize auto pay whenever possible. The other was you should set up an operating account. So if someone has check writing privileges, have an account solely for that purpose, and you should be funding that account to cover those bills. Each month, you make the transfer from one account to that particular operating account. So what you can do is sit down with your business manager, or your manager can tell you, hey, look, here's the estimate for the bills this month. They're going to add up to approximately X amount of dollars. Fund those dollars so that they'll handle the minutia of paying the actual bills. What you would just have to do, and this does require you to be a little bit more hands-on, is that you just make that one transfer from your one business account to the other. That way, if funds were to go missing, get misappropriated, it's budgeted out. So those flags are going to come up a lot earlier in the sense of, well, if things are budgeted out and something gets paid for something that wasn't accounted for, then the account's going to be empty and not able to cover the bills it needs to cover. And then obviously that will warrant a conversation with you or your manager, because now they would need to come to you and say, hey, look, we're short, we need to transfer. Why? You don't want to give someone carte blanche on an account where the funds are unlimited. You want to try to make sure that you limit the amount of funds that are in that account, and you make the transfers into that account. You can keep the excess in an account that they can't touch, or they just don't have check writing privileges on that particular account. And the last point is approve payments. So I know Bill.com does it, and I think Fat Joe said he was using that particular software. Go get the Bill.com account and you add people to it. Don't let them do it. But on top of that, Bill.com, I'm sure other bill payment softwares have it, where you can put in approval rules, meaning that when the bills come in, those bills can be presented to particular people who then approve the payment. So you can put rules into place and say, hey, look, if the bill is more than, say, $500, this needs to get approved by someone. So what you can do is involve someone that's a trusted confidant. Maybe that be your manager, your road manager, family member, a parent, and say, hey, if a bill is over this particular amount, you get an email for it, you check it, and you approve it, which now allows you to say, okay, what is this for? Who is this for? So over a certain dollar amount, particular vendors that aren't, whitelisted or approved, there are a number of controls you can put into place for that to be approved. So you could have two layers. So let's say if the CPA that you're dealing with has an admin. So you could, for amounts over, I'm just using hypothetical examples, $500, the partner or the main person needs to approve this for amounts over $500. Now, if you control the Bill.com account or the bill payment account, you'll have a record of this. So that way, you know that there's more than one set of eyes, not just the admin person doing that. If it's over, let's say, a higher amount, so $500, the CPA partner needs to take a look at it. $2,000 or more, then maybe that comes to you or a manager or a family member that can take a look and approve this. So you have multiple sets of eyes on a particular bill, so that if someone is writing checks out to someone they're not supposed to, you'll have more than one set of eyes on it. So there's an approval process. Now we have dollar amounts. So if someone were writing checks out or sending money to places that were below these thresholds, could it avoid that? Probably not. But at the end of the day, these would be smaller amounts. And then the idea is that with the rest of the controls in place that I spoke about, you would still be able to hopefully catch this. And then if you did, because they were smaller amounts, the missing funds shouldn't be that much. So yeah, that's it. Those are my points that I wanted to go through. If you're in the market for business management, it's obviously something that I provide, but whether that be with myself or whoever, these are the things you just need to look out for and have controls in place to make sure that you don't get taken advantage of. All right, that's all for now. I'll talk to you again soon.